Hello and welcome everyone to today's video. My name is Shanti. I'm a market analyst at FXpesa and I will be your host. Today's video will be talking about the US market open. And just before we start, I need to remind you everyone that whatever kind of information we provide here is for the educational purposes. We recommend you that you do your own analysis and your own studying of the markets before making any investment decisions. We also recommend that you use risk management tools before making any trading position using the trading platforms. So getting started, so what happened in the markets today? So the European markets and European and US stocks market are currently extending their gains. The gains that they posted yesterday as fear about slower global growth has faded. Another talk that we need to mention is that the euro and pound kind of nudged up as the ECB and after the ECB and Bank of England comments, while the RBA or the Australian Bank or Reserve Bank is actually caps the OC gains. So also another topic that happened in today's session that the risk on mood is circulating in the commodity markets. Is you can see after the latest drop in the WTI, we saw some kind of retracement to the upside. So items such as the WTI, Brent, and also copper and platinum are edging higher. So also we have the minutes from the latest Reserve Bank of Israel meeting stated that the banks are committed to tackling inflation, and it suggests that more rate hikes are on the agenda, which indicates that they are following the other major central banks' movements, similar to the Fed's, the Bank of England, and also to the latest surprisingly moves from the Swiss bank, the Central Bank of Switzerland. So in the past few hours, the Australian dollar has cooled a little bit. Also, we have coming the US existing home sales, which will be posted later, and economists are expecting 5.4 million, while the April reading of 5.61 million was the lowest level in 22 months. So that's the main topic that happened today. However, it's a little bit quiet in terms of movement. We will see that in the MT4, in the technical charts, where will you see how everything moved. However, the main topic is that the market kind of turmoil sparked by last week's round of central banks rate hikes was reduced further in today's session. You know, the reason because the worries about the recession were put on hold while investors weighed the risks of some key data and the testaments of the Fed Chairman Jerome Powell. So the European markets, the European stocks market were headed for a second day of gains, while also the Asian markets were mostly higher. Now, Wall Street futures are also pointing to a solid open, with US traders return for their long holiday weekend. Now, usually during summertime, usually the markets tend to slow down a little bit, but that doesn't mean there is no trading opportunities. So other than that, nothing much has changed since last week surrounding expectations about central banks tightening or signs that inflationary pressures may be moderating, okay? So the recession is still the foremost concerns for investors. So this week's rebound in equity markets looks more like, let's say, a technical correction. So this kind of technical correction happening after a really heavy selling, so over the course of the past 2 weeks. So especially also if you look at the bonds market, so the bond growth is also likely aiding the sentiment as yields is settled just below the recent highs. So if you look at the 10-year US Treasury notes, you will see it's came very close to close above the 3.5 mark, especially after the Fed decided to hike their rates by bigger than expected rate hike, which was 75 basis points last Wednesday. So other than that, that's the current theme of the markets. So if you want to look for further like insight, you can see here how each items from the Forex market actually performed on a daily basis. This is just before the US open. I know the US market just opened. It's been like 30 minutes, but this is the performance just before that. You can tell that the WTI is one of the best performer, almost 1%. more than 1%. Euro JPY, also the euro dollar is gaining momentum. And as I mentioned, also the Australian dollar is gaining momentum. Pound is gaining momentum also to the upside. However, the biggest loser is the dollar index and the USD CHF. So basically everything against dollar today kind of flourished. But if you look at gold and Euro GBP, it doesn't tell you that much because gold didn't move that much. It's currently stabilizing near the 1838 as investors, as I mentioned, are worried about the recession and they are still waiting for more details about how the inflation will be coming in the next month, the inflation number from CPI numbers, how much it will fall or how much it will stay as it is, or will the recent hikes from the central banks will affect the inflation numbers? Because if the current tactics of the central banks is that they need to stop inflation getting higher and higher, they don't want the economy to get more overheated. This because will hurt their economies, and basically it will create an inflationary pressure, inflationary recession, which is something they cannot afford. It happened during the 1980s in the US, and they couldn't afford it. Another thing that you need to be aware of is that growth numbers, if you look at the PMI numbers, if you look at the housing numbers, or even if you look at industrial numbers, you can see there is something, they are getting lower and lower. They're losing their momentum, basically indicating the growth of the biggest nation is falling down a little bit. Now, that kind of drop is actually creating some concerns for investors, especially with higher inflation. This is what we call inflationary recessions. Basically, they don't, the central bank doesn't want that. So therefore, they might actually even go tighter and even push more rate hikes just to push the inflation as much as possible to the 2% target that they are targeting in general. So let's go to the technical setup. So let's look at the charts, starting with gold. Now, as you can see in the chart, this is the 1 hour chart. And as I told you, the precious gold is literally staying within a narrow range over here. However, it's more biased to the downside. So if you look at this flag over here, you can see prices are literally going this way. So this is the small channel over here. However, there was an upside happening. So this is a bearish flag. This setup is usually considered a bullish setup, especially if prices were able to defeat the resistance from this channel over here. So let's look at the numbers over here. So we have this number, which is the 1842. Next, the above high over here on 1853 and 1858. So the next level for bullish traders is that they need to defeat this level over here. So a defeat of this critical resistance level, previously a support level over here, it was a support level over here. And now this area is very crucial, near the 1844, 1842. A defeat of this area could indicate for further continuation for the upside. Now, how can we tell if prices will continue to the upside? First of all, we need to see the MACD and the RSI point to the upside. So what's happening is that we need the MACD to have a bullish crossover, and both lines go above the zero mark. That indicates that the bulls will take control, and maybe we could see a continuation. What's next for them? An immediate resistance awaits, which is the recent highs of the 1853 and the next day 1858. So a defeat of these two levels over here will definitely push prices all the way higher to the levels of 1878, which is the major high that a lot of traders are waiting to be defeated for the bulls, right? Now, failure to defeat the 1842, or even a failure to defeat the 1853 after that, we could see a small retest happening. Maybe prices could go higher like this and then go down again, and this channel will be canceled off. However, if we saw prices bounce back from this area and then continue to the downside, that means there is a new trend happening. However, we need some prices to be defeated. What is from the downside? So the main level that we need to see to be defeated is this. So if you look at this number over here, which is the 1832, this is very crucial. If we saw prices or bears push prices all the way to the 1832 and defeat that level, we could see prices all the way to the end of these lows over here. So maybe at this level, that's the main target for the bearish traders. Now, at defeat of this level, we could see prices all the way again towards the 1807 or 18 mark, and that's a psychological level. And at defeat of the psychological level, usually tend to create further bearish movement. So this is it for the precious metal. Now let's go for the WTI. Now, one of the best performers in today's session, you can see prices actually reached a low of the 106. You can see that their price actually were moving in a narrow range, and this range over here got defeated. So the 116 and 121. After that, that's last week movement. So what happened is that prices defeated this level, moved down, and then bounced back again, retested the 116, failed to defeat it. We saw prices go down again. Now, in today's session, we are seeing this movement over here. So this movement explained that maybe this kind of bearish setup has ended, and now you can see the MACD is pointing to the upside above the zero line, which indicates bulls are in control. Still, there is no overbought territory. That means we're still clear in the indicator, clear in the rally. So prices must go all the way above this level, which is the 109. You can see it over here, 109, 110, 25. At defeat of this level, a continuation, there will be a clear path for prices to continue all the way back to the 116, and a retest of this level will be very crucial to see if there will be a continuation or not. Now, a failure to stabilize near this area, we could see prices breach this small trend line over here and then retest mark. So be careful, traders, while trading oil. So especially because the latest lockdowns in China has affected the demand side also, while also, as you can tell, the Russian-Ukrainian war still affect the output of oil in general. That's why we need to keep following any news regarding these two to actually see how it's going to affect oil from a technical setup. So it's currently stable in the last 4 hours or even 5 hours near the 109. Maybe we'll see a test at the 110 and then follow it by the 116. Failure to do so, we could see prices all the way back to the 106. Let's go to the euro dollar and pound dollar. So the euro dollar has been able to bounce back from the areas of 1.03 or 0.38. So if you look at the 4-hour chart, you can see there is a double top over, a double bottom over here. If you look at the 1-hour chart, there is a double bottom over here, exactly here. There's a double bottom, and you can see a new trading setup is happening. We could see prices retest this area, which is the 1.0387 or 1.04 in particular, and at defeat of that level, we could see a continuation to the big or long-term trend that's happening over here. Now that's a long-term view. Now let's have a look at the 1-hour charts. So prices must continue all the way. Now after it bounced back from the lows over here, we are seeing prices doing this uptrend. So this is the uptrend. You can confirm this uptrend by looking at the line chart. Look at the line chart. You can see there is an uptrend happening, all right? Especially with the closing prices of the candles, you can see there is an uptrend happening. Now, what's next for the bullish traders? We need prices to defeat the recent highs of 1.06. At defeat of this level, we could see prices all the way again to the 100 to 1.07, which is very crucial for traders. Now, a failure to do so, we could see prices all the way back again and retest this area, which is a crucial support level over here, which is the 1.0454. So that's the main levels that everyone needs to look at. It starts with now, how can we confirm this is happening or continuing to the upside? You can see there was a failure attempt of an oversold, an overbought territory. So we saw prices here overbought, and then it traced back. However, it stabilized near the 1.0550. Now, what's next is going to be the 1.06 for bullish traders. At the feet of this level, we could see prices all the way again to the levels, to a higher levels near this area. So 1.40. 1.40, and then next to the high, to the latest highs of 1.0772. That's the main levels that traders must look at in order to see a continuation to the upside. Now, a failure to do so, we could see prices all the way to the 1.045, and then next to the double lows and the neckline of 1.038 or 0.36. So these are the main levels for the euro dollar. Let's go for the pound dollar. It's almost similar case. So there's an uptrend happening. Okay, bullish momentum in both the MACD and RSI, suggesting that bulls are controlled. But if you look over here, you can see the MACD is giving us a bearish crossover. A bearish crossover indicates that maybe prices could go lower again, but there is levels needs to be defeated before that. So what's the main level? The 1.2182. That area is very crucial. From the top side, we need the price to defeat the 1.2410 to see further continuation. Now, an immediate resistance awaits traders, especially short-term traders, which is the 1.2326. This high is very crucial because it represented the overbought over here, but maybe prices could continue to the upside near this area. And at the feet of this level, we could see prices reach the highs of 1.2410. Looking at the stocks market, this is one of the things that we've mentioned earlier, that because of the latest concerns about recessions has been reduced a little bit. We saw prices reach the lows of 29,650. And if you look at the Dow Jones Index, we're seeing prices are edging higher and higher. Now, yesterday's off day for US banks has actually helped that. However, we could say that this uptrend over here, or this very minimal uptrend happening, is considered a correction for this downtrend happening. So this is very normal. Now, what do we need to see to confirm, is this a reversal or is it a new uptrend happening? So this is where the moving average plays into place. We need prices to close above the 30,790 or 30,800 to confirm that maybe we are creating a new bullish uptrend. We need prices to close above the moving average to confirm that this is a new uptrend happening, because it happened before. We saw this trend line happening. Can you see this channel over here? Once prices tried to go above the moving averages, it bounced back again. Now, this is what happened for this channel, is that again it tried to defeat it, and it was successful, and it pushed higher and higher. However, this played as a crucial resistance. Same story could happen again if prices were able to defeat this. Now we have a resistance over here, a support line over here. We need prices to defeat the moving average over here to confirm the same setup as this. Now, this was a really bearish rally. However, what we are seeing is a big slide happening. So I would expect prices to continue to at least reverse to this area. A closure above the 30,800 mark is expected. However, we need to see a retest happening. So maybe prices could go here, bounce back. Now, if it bounced back, what should we aim for? If prices were able to bounce back again, the second moving average over here is very crucial. So we could see prices go higher to the 30,800 mark, then bounce back again, retest the 30,300 mark. And this level, if it was defeated, we could see a continuation to the downside. How will this continuation be decided? A defeat of the 29,650 is important to see a further continuation to the downside. Failure to do so, we could see prices stay within a range between the 30 mark and the 30,800 mark in the coming future. Therefore, traders, I suggest you wait for for a retest happening and more confirmation from your indicators, especially the MACD. The MACD must go above the negative territory to confirm that bulls are in control. Currently, we're seeing a bullish crossover happening, or happened actually, and we're still seeing that this is a reversal, but the two lines must go above the zero line to confirm a bullish setup. And for the time being, prices didn't reach the moving average of 3,800. Maybe prices, if it were able to reach the 3,800, maybe you could see prices continue to the 32 mark, and then 32,570 back within this range. Other than that, I think prices could retest this and then go bounce back again. So plenty of risks ahead. So we have Powell will be speaking before both the chambers of Congress on Wednesday, also both on Wednesday and Thursday, and may signal that more aggressive rate increases will be needed to combat to tackle the high inflation. We have also crucial PMI data for June, as well as inflation numbers for the UK, Canada, and Japan are due this week. So there will be plenty trading opportunities for you traders, especially if you look at the yen pairs, or even if you look at the other indices from not just from the US, but rather from the UK. If you look at the FTSE 100, or even at looking at the DAX, there will be trading opportunities. Also, if you need another indicator on how the indices will perform, the VIX roll. So the VIX roll is very important because it represents the sentiment. Okay, the VIX roll, which is basically the VIX index. This represents the fear index. So what happens is that whenever you see some low sentiment or risk of mood, you could see the VIX go up, and the exact opposite happen when there is risk on mood happening. You can tell that the index is going lower and lower. So if you compare this to the Dow Jones, you can see the Dow Jones is edged higher, while the VIX is edging lower. This is a clear indication that there is a bullish sentiment in general in the US markets. So that's it for today. I want to say thank you for staying with me during this video. Please tune in for next week videos and for the daily videos that we provide in our channel. Please subscribe, and thank you so much for your time. Enjoy your evening.